Hey, this is Jenny Kassan here as usual to lay down the law about all the cool things that you need to know to be able to raise money for your business in a way that allows you to stay true to your goals and values and stay in control. So, something I thought I would share about today is something that a lot of people have been talking about. You may have heard about it, maybe not. It's called opportunity zones. And it's really good to know about opportunity zones because potentially it could benefit you depending on if your business is located in an opportunity zone or could be located in an opportunity zone. So the opportunity zones went into effect in the law, the tax law, that passed in 2017, the new tax law created this opportunity zone thing, and it provides a really, really good tax benefit for anyone who invests in an opportunity zone. And that could be for investing in real estate and improving real estate in an opportunity zone, or it could be for investing in a business that's located in an opportunity zone. There's a lot of detailed rules on how you can actually get those tax benefits, so I'm not going to go into all those details, but I just want you to know that there are websites where you can check and see where the opportunity zones are in your community. And if you are already located in one, or if you've been thinking about opening a business in one, you could raise money from investors who could get quite a nice tax benefit from investing in your business. So I'll just briefly tell you what the tax benefits are. So if people invest in your business who are investing a capital gain, so if someone invests in your business and the money they invest in your business is money they got from selling like appreciated real estate that's appreciated in value, or stocks that have appreciated in value, they get a nice tax benefit on that because they can defer the capital gains tax on that investment that they, the money that they just made off of selling that stock or that real estate. And so they defer the gain, and they defer the tax on the gain, and they also get a reduced tax. If they invest this year, they get a 15% reduction. If they invest next year or the year after, they get a 10% reduction. So that's really nice. So that's one part of the tax benefit, but that only benefits people who are investing money that they got from a capital gain, sale of an appreciated asset. But the other tax benefit, anyone can take advantage of it, no matter how wealthy you are or non-wealthy you are. So if someone invests in your business and in the correct way, which I'll tell you a little more about that in a minute, and they invest in an opportunity zone business or real estate investment, the gain on that investment is going to be tax-free as long as they hold it for at least 10 years. So if someone, let's say someone bought equity, let's say you moved your business into an opportunity zone and you sold equity in your business. And again, I'm going to tell you a little bit more about what that has to look like. It's not just, there's a little more complexity to it, but basically you get some equity investors in your business. And let's say 10 years from now, the value of your business has gone up by 10 times, and you sell your business to someone else, or you sell it to your workers or whatever. And so the value of that investment that people made 10 years earlier is, 10 times the original value of the valuation at which they invested. So for example, if I invest $10,000 in your business now, and 10 years from now, my investment is now worth $100,000. Normally, if I sold my investment, I would have to pay capital gains tax on the difference. So 100,000 minus 10,000, I'd have to pay capital gains tax on $90,000. But if I invest in an opportunity zone, if the investment I've made is in an opportunity zone, so your business is in an opportunity zone, believe it or not, I pay no tax on that gain. So it's extremely attractive, and anyone can get that benefit. You don't have to be wealthy to get that benefit. Now, the thing is, you can't just do it where you say, oh, hey, I'm in an opportunity zone, come invest in my business and you'll get this tax benefit. No, you have to do it through something called an opportunity fund, a qualified opportunity fund. People can't invest directly in your business to get the tax benefit. The investment has to be made through a qualified opportunity fund. And a qualified opportunity fund is not a complicated thing to set up. It's just a simple corporation or limited liability company. But all the investments have to go through that. So if you think that you might be about to locate in an opportunity zone, or you recently moved to an opportunity zone, if it's somewhere you've been for a while, it may not work. It has to be I think it has to be 2018 or later that you located in the opportunity zone. But if you are in an opportunity zone or planning to move to one, I would definitely check with a tax expert who understands opportunity zones and see if an investment in your business might be considered a qualified investment for an opportunity fund. Because in that case, you might be able to find an existing opportunity fund that might want to invest in your business, or maybe you just set up your own opportunity fund, or you get together with some friends to set up an opportunity fund. So there's obviously a lot more detail to it, but considering how complex it could be, how many, like to get it, for example, like if you wanted to get a tax break for investing in a historic building, like the paperwork and the complexity is huge. Relative to that, this is fairly simple. You just need to make sure you do have a knowledgeable CPA or tax lawyer on board to make sure you're doing it right. So don't let this opportunity get away from you. Haha, we say opportunity a lot when we talk about this. If you do it, if you raise money from an opportunity fund before the end of 2019, the investors get the best tax benefit because they get that 15% reduction in capital gains tax from an existing capital gain that they invest in your business. But even if they don't invest this year, they would still get 10% if they invest a reduction in tax if they invest in 2020 or 2021. And then even then, if that doesn't even work, that's still cool because anyone who invests even as late as 2037, I believe, can get that no capital gains tax at all on the gain on the investment in your business or real estate project. So definitely something to pay attention to. Look online. You know, there are a lot of websites where you can enter your address and see if you're in an opportunity zone. All right, I'm going to stop there. I do want to let you know that we have an assessment that you can use if you need to get a sense of how investable your business is. If you're ready to raise money from investors, just go to fundandfuelyourdreams.com/readiness to take our assessment, and we'll let you know how close you are to being ready, and if you're not ready, what you might need to do to get ready. All right, have a good rest of your week. See you next time.